if you could please introduce yourselves and how you ended up investing into Web3, crypto, blockchain. Yeah, that'd be very helpful for the audience. Charles?
안녕하세요. So my name is Charles. I'm an investment director at UOB Venture. So UOB stands for United Overseas Bank. It's a bank that's based in Singapore with ASEAN regional footprint. We have around about 500 branches spread around the ASEAN region. So myself at UOB Venture, I manage a blockchain technology venture capital fund that invests into Web3 startups globally. Very happy to be here.
My name is Kung. I work in Tembusu Partners. We are a family office. And how I got in blockchain is because one of the funds we started is a blockchain fund. And we did that starting from the year 2018, which was a good time to start because things were, compared to the peak, very cheap. And even during the crypto winter, we are still above water. So we are very happy that we went in early.
네, 여러분 안녕하세요. 제 이름은 제이슨 프란시라고 합니다. So a bit of a cheat code. I used to live in Korea for 15 years, but I currently live in Singapore now, and I'm the executive director of Signum. Signum is the world's first digital asset banking group. We received a full banking license from FINMA in Switzerland just over 5 years ago. We hold a capital markets license and a VASP license in Singapore. We also hold licenses in other key jurisdictions such as the UAE, Liechtenstein, and Luxembourg. So basically, we provide a suite of financial services to help the Web3 space because even today in 2024, a lot of Web3 projects and companies, they still lack access to basic financial services, and we're here to help.
Great, thank you for that. So I have a question for Jason. So what are the key differences between traditional assets, other asset classes, and RWAs? And how does Signum, as a global investment institution, view the emerging asset class?
Sure, I'm happy to start. So just a disclaimer, not financial advice. I mean, RWAs are quite a bit different than investing in traditional assets, although they are often representing the underlying, which are traditional. Things like composability, what you can do with automated smart contracts, fungibility of the tokens, trading venues being able to be traded 24/7, for example, globally. So it really helps to give a reach, through the technology that is more difficult with traditional markets. As well, I think, something that's quite interesting is, giving a democratizing effect to access to some of the underlying assets that are tokenized that would typically be restricted to only professional investors or accredited investors. So opening the door for better access to some of these unique asset classes.
Okay, great. And a question to Charles and Kung, more as investors. So what are the current trends in the RWA market, and how do you anticipate the tokenization of assets will impact the broader financial and investment landscape? So Charles?
Yeah, sure. So actually, I feel that the RWA sector is still in the very early stage of development. I think there's still a lot of room for market growth over the next 5 to 10 years. I think the growth in the market will be primarily driven by technological advancements as well as more regulatory clarity around the world. So I think a few emerging trends that we are starting to see, I think over the next 5 years, we would definitely see more and a wider asset class being brought onto the RWA space. Because traditionally, currently, if you look at the whole tokenization landscape, most of the products are traditional financial products, the likes of funds, bonds, real estate. But I think over time, we will see a growing pool of assets, commodities, carbon credits, intellectual property rights, and things like that. So I think that's one trend. I think the other area that I personally is quite interested in is how RWA and DeFi can actually come together, how these two can integrate one another. So you imagine you're a token holder, RWA token holder, you go onto a DeFi platform and you can take out a decentralized loan against that collateral. that actually, to me, is quite exciting because it actually adds a more dynamic yield opportunities for both lenders and borrowers. So I think as DeFi matures and as the RWA space grows, I think the integration of these two will be an interesting trend to see.
Yeah, so my own view is that a lot of people ask, what is the value of blockchain? And I think the real world assets is one of the best way to show the value of blockchain. And because of that, we've seen in the year 2024 that it's really what we'll call a breakout year for real world assets because the type of real world assets, as Charles was talking about, has been increasing a lot. I mean, yes, both physical assets, yes, also intangible assets. I mean, real world assets like real estate, intangible assets, even like carbon credits, future earnings of athletes. So very interesting, novel ways of accounting for value and trading of value using blockchain. And just to give you some data, if you think about it, Chainworld estimates that the global market for real physical assets in the world is about US $867 trillion. What is available on chain out of the $867 trillion is only about, well, I won't say only about, it's about $187 billion is only on chain. And most of it is actually stable coins. So there's a huge amount of opportunity for real world assets to go on chain. In fact, there were some estimates of the growth. And one of the estimates growth that was came up by Trend Finance was that the market is likely to grow by the year 2030. Now, 2030 is only 6 years away, so it's not very far away. So by 2030, the real world assets going on chain is likely to be about US $2 trillion to US $30 trillion. Now, if you think about the median, which is 10 trillion US dollars, that's still 54 times of what we are today. So in 6 years' time, the market for on-chain real assets can grow by 54 times. So that's a huge opportunity.
Great, thank you. And due to the interest of time, we only have a couple of minutes left, but I am going to ask a question that I am personally curious about. And I know Jason already qualified by saying that this is not investment advice, so let me reiterate that. But as a fund or an institution, what criteria do you prioritize when investing into RWA opportunities? So maybe you can start with Charles.
Yeah, sure. So as a VC fund, typically we don't invest in the underlying RWA asset itself, but rather we look at companies that are building the infrastructure for RWA tokenization. So these could be token exchanges, or it could be lending and borrowing platforms. So when we evaluate such investment opportunities, there are a few risk areas that we typically look at. I think one is obviously the technology, robustness of the platform. As all these assets are being brought on chain, obviously one of the most important criteria is security. So we take a deep dive into the technology, robustness of the platform, whether there are any underlying smart contract risks, the stability of the platform itself. So technology is one area we look at. I think the other area we look at is liquidity considerations, whether we see an active secondary trading market. Because obviously liquidity attracts more liquidity. So the more liquid a market is, and assessment is there is a big secondary market liquidity out there, then obviously the risk is much lower. And I think the third area is, as with all investments, we look at the management team itself, whether the management has a capability, a track record, execution, and how deep the management bench is. So we assess both technology, management, as well as smart contract risk.
So for Tembusu, one of the things that some of the things we look at, obviously, is regulatory compliance. I think in the last two sessions, they talked a little bit about that. If you don't meet the regulatory compliance, you can be in a lot of problems there can be huge delays because the government can put all sorts of barriers to whatever you're doing. So regulatory compliance is one of them. The other one is, as Charles mentioned, I think the quality of assets, because we're talking about real world assets. So when you have a token that represents the value of that asset, obviously the asset is one of the key considerations. And how liquid is that asset as well is going to be another key consideration. So this aspect of market liquidity is something to think about, because as one of the previous speakers talked about, many institutional investors, when they go into real assets, actually may be looking at the long term. So if you go in with them, you might have a different timeline compared with them. And perhaps last but not least, some of the things we look at is, of course, exit strategy. So how do we get out? You can't get out, you can't earn your money.
I guess just a final thought. I think the gentleman touched on most of the key aspects, but and this is a personal opinion. When looking at these things, sometimes you need to kind of zoom out and ask a simple question like, does this need to be tokenized? Why is it being tokenized? What efficiencies are we gaining by tokenizing it versus investing in more of a traditional sense, right? A lot of times it sounds good in theory, but if you actually dig into it, then it can even add more complexity due to regulations and illiquidity and other things. So I think that's kind of a fundamental starting point when looking at an RWA project.
Thank you for that. Okay, I think we're out of time. So thank you very much for sharing your thoughts. And yeah, we look forward to connecting after BWB. Thank you.
Thank you.
감사합니다.